Welcome to Sip, Sell, Repeat, the real estate podcast for women who know success is best served with a great cup of coffee or a well-earned glass of wine. I'm Dr. Cynthia Tant, your go-to real estate expert, here to help you navigate the market with strategy, style, and a little bit of fun. Whether you're flipping your first property, scaling your portfolio, or just dreaming about your next big move, this is the place for you. So grab your drink of choice, settle in, and let's sip, sell, and repeat our way to success. Let's get started.
Hi, I'm Dr. Cynthia Tant with Sip, Sell, Repeat in real estate. And I first have to let you know, I apologize. I'm in a situation where I'm not normally in this particular environment, but the place that I do my podcasting happens to be no internet connection right now. So that wasn't going to work.
That's a problem.
So that's a problem. So I have Leah Whitman here and I'm in my office. So if unfortunately you hear a ambulance siren go by or cars or something, don't be, I guess you would say, worry about it. Okay. It's just, I'm in a different place right now. But Leah Whitman's with us today, and I'm so excited to speak with her and hear more about the program that she has involved with, and also her coaching and her investing, and how that we can help you and she can help you in learning more about that particular program. And Leah, tell us a little bit about how you got into it and what you've been doing before we share some information about the program itself.
Yeah, I would love that. And thanks so much for having me. Yeah, Leah Whitman. And just quick background for me, I was in corporate America for 35 years or so and had an amazing career. And I did all the traditional investment and retirement planning stuff. And I guess it was around 2019, I was actually in a personal development program and I was in a new relationship. I had been married before and money was always a really big problem in that marriage. And so I was seeking money alignment with my partner at the time, who is now my husband. And
that was a good choice then, right?
Yes. Oh my gosh. Talk about divine. I could talk for hours about
Okay.
Yeah, let's not get me sidetracked.
Okay, we won't talk about that.
Yeah, these forks in the road that come to us is really amazing to look back on, to be honest. So my mentor of the personal development program had been always talking about the vault, and money alignment. So she referred me to what's now called Wealth Outside Wall Street. It wasn't called that at the time, but and so I listened to their first webinar and I was immediately hooked. Like I'm a quick start, and when I commit to something, like I jump in both feet. And I binged watched the content, and then literally, so this is like May of 2019, and I started implementing the system immediately. So I did everything that nobody tells you to do. I sold all my stock. I stopped contributing to my 401k. Who does that stuff? And I'll use concepts and things that we use in the system, which we can always deep dive into later. But I set up vaults for my husband and I, which is a place to basically create your own banking system, become your own bank, think infinite banking type of concepts, and a place where your money can grow tax-free, right? So lots of great things. And then I continued to do education, and then at the end of 2019, I bought my first turnkey property. Now, prior to that, I had always known that real estate was important. Now I live in California, so the real estate market here is in a tough nut to crack, but I had cracked it in my 20s and had continued to grow and upgrade. So that was great. But I had bought a duplex. I won't even talk about that crazy Eddie deal, but I bought
those. Yep.
I bought this duplex because I just knew it in my heart that real estate was really important, but I didn't have a system. I didn't have a community around me. And so that's why the system and this program that I got involved in 2019 just really spoke to me so much. And so I bought my first real estate turnkey property in December 31st while on vacation, by the way, which I think is the best way to buy real estate. And this was an investment property. It wasn't like a lifestyle asset. It was an investment piece of property. And then in 2020, because I had repositioned all this capital in 2019, I basically went on a shopping spree during COVID. So while everybody else was just melting down, I was busy shopping for real estate. And
Right. Yeah.
I think I bought like 12 properties in give or take in 2020. And so that just really launched my whole system, right? We call it the passive income machine, is what we call it. And there's all kinds of there's fundamental principles to the different components of that. And by reconfiguring all my assets from 2019 over the next 18 months, I fundamentally became financially free. Now, not everybody gets to do that, but because I'd been a good saver, I'm a little older in life and not a spring chicken, but because I'd been a good saver and because I repositioned my assets under the system's principles, I became financially free. And so in February of 2021, I was able to retire from my corporate job on my terms, which was amazing because then it allowed me to really prioritize myself. It allowed me to step off the rat race. It allowed me to prioritize and spend time with my husband. We have grandchildren now, so I spend time with them, my son, and to really start to focus on doing stuff that I am very passionate about and really giving back in many different ways. So I pause there. It's, I guess, hopefully a short synopsis of where I've been and where I'm at now. But
No, that's great because my background started out as a college professor, but I got involved in investing and in the Pensacola area, which is where I live now. And best, I guess the best thing that I ever did was to get a realtor who was an investor. And she just started showing me. My brother and I got together. We had money also. And then back then, this was 1996, 1994. So that was a way long time ago where the interest rates were okay, but the prices were very low,
oh yeah.
and we started in multifamilies. You're gonna die is, and I tell the story is that we got two duplexes and a triplex near water for a total of $62,000. When people go, "Are you kidding me?" I said, "No, we still have them too," but it was just a different world back then.
Yeah.
So I knew nothing about investing, didn't have a system, didn't know what I was doing. I made tons of mistakes. I wish I would have known more back then because I really made a lot of mistakes. But I had a mentor and a realtor who helped me learn with her. And so we just blindly followed her. And I'm glad we did. The system that you have, and again, I've just been doing a lot of old school stuff still, and we've held on passive and then bought some more and sold. And then I'm really on the passive income myself, as again, being older and say, I don't know what's going on. My retirement from my teaching is sitting in the stock market, but I am not even looking at it. It's a little scary these days. But what would you say someone that's getting started about the system and how you went from really diving in and giving it all and doing everything you're not supposed to do in the beginning with your income, and how did you know that this was the system that was going to help you or make you into that financial freedom after a couple years? How did you know?
Yeah, it's an interesting question. So I might not have blindly just jumped in if it hadn't been a referral to this group from my mentor. Okay, so one, there was a warm connection. Secondly, the principles that they spoke about made sense to me. Right, I had enough dealings with my duplex and my primary home and just being an investor for a long time that it just made sense to me. Right? Everybody has a different range of financial IQ. And so while my financial acumen now is gazillion times higher than it was in 2019, but even coming into 2019, I wasn't completely naive, and we still help people who like have no idea about anything, right? So it's not that you have to come into the system having experience, right? And then there was just an aspect of faith, right? And just Real estate is a very powerful tool. It's not the only tool in the system. We really combine when people come into the system and we create a customized game plan, is what we call it, for them. Because everybody's in a different life phase. Everybody's has different assets. Everybody has different life conditions and priorities and where they're at. And so we take all that into consideration and then we structure a customized game plan that is really shows you where you're at today and the art of where you could potentially go. In the end, it's your decision. We're just showing you the art of the possible. And then the system is multi-layered. And again, depending on where you're at, because it's all about sequencing. So if we sat down with somebody like you versus somebody in their 20s, there's going to be different sequencing because it's probably a different asset base, different priorities, all that stuff. And so we really combine taxes, we do education, the vault, which is where you store your money, grow it tax-free, real estate, which is a very powerful tool. We do over time create what we call a private pension. So it's a way to configure your assets that's really reliant on and sets you up with basically passive income that no matter what is happening, you are getting a steady stream of income. So your real estate's going for crap. We tend to pull most assets. We don't pull it off, but our community tends to, over time, once they raise their financial acumen, take their money off of Wall Street because you can't control Wall Street. Your money's only working for you one way, and then you're still getting taxed on it. You don't get to control it. So there's just so many challenges with Wall Street and the traditional retirement vehicles. It's not that, anybody's doing anything wrong. We're just doing it differently because we believe that there's a better way, that a system that works and sets people up for success. We take that customized game plan, we wrap the components around it that work or logical for you. We provide coaching along the way so that you're not doing it on your own. We have an amazing community that is there to support. The community is actually one of the best things because it's not a community that goes, oh, I'm not going to tell you where I'm investing, or I'm not going to tell you what I'm doing. I'm going to keep it a secret. Like they're sharing. It's like the most open community I've ever been involved in. And it's all people who they're looking for something different. They're how can I people. So they're a fun bunch of people also. And it's men and women. And again, we have people from their 20s into their 60s. We've got the whole range.
And that's what I was going to ask you from the standpoint of if I came to you or if I heard about you or is referred to you and your system itself, the type of person that you were looking for. Everybody obviously out there wants to make money, but there's only a certain group of people that will actually take the action. So how would you identify that person that is coming to you, like the 20-year-old that has no clue but's very eager, or the person later in life that maybe has more money that can do stuff, that is looking at today's world and going, what am I going to do? So what are some of the factors or things that you look at for that person or group of people that you'd like to come on board with you?
Yeah, no, awesome question. I appreciate that. What doesn't really fit in our program, if you're in excessive consumer debt and not saving 10, 15, 20% of what you make, then, we would really recommend that you get your house in order first. So you don't have to come to us with billions and billions of dollars. That's not it either. But we find the sweet spot is people who already have a mindset of they're already saving, and not that people don't continue to improve their game, because we do really focus on, we have what we call a strike number, and there's 3 levels of the strike number because there's really getting clarity of what is your base expenses. Like, what does it mean to keep the lights on? How much to keep the lights on, to keep your health care in place, to what is the base to keep things running no matter what? Then there's what your lifestyle is that you're actually living. And then there's that next level up is what that desired lifestyle would be if you want to eat guacamole every day, let's say, right?
All right.
And so there's this, we really are teaching people to be a steward of their money and to be thoughtful of not, if you have $1 to spend, where are you spending it intentionally? And what is your why? And we highly believe in debt, right? Leverage, but
Average.
it's good debt, right? There's
Mhm.
good debt and there's bad debt, right? So we're not suggesting to go out and put lots of things on your credit card and just spend, but we do have this balance of living today versus waiting until you're 65 or 70 or 75. So how can you really make your money work for you now versus someday? And so that sweet spot for us is if you took a 20-year-old, if they're starting to make good money now and we would love to sit down with them and show them here's an alternative of how you can leverage your money today and make it grow for you versus putting it in a 401k or an IRA or just and or the market. That we do feel there's an alternative way. If you go to the other extreme and you say, okay, actually, I just looked at a game plan today of a 61-year-old and it works for them too. They came to us with a good set of assets. And so looking at how to reconfigure those to optimize, because if they're 60 today, and I tell this to my husband all the time, sweetheart, I'm making decisions right now because I'm expecting that we're going to be on this planet for the next 40 years. We still have a long life to go. And if we don't set up our assets appropriately, then we could run into problems later in life. And we're not going to go back to work at 80.
Yeah, that's true. That's
40
true.
years is still a really long
Long
time.
time.
Like for the
Yeah.
20-year-olds, like 60 might sound really old, but like we still have another 40 years on this planet. So it's really setting up the asset base so that you're hedging against inflation, you're minimizing your taxes so that you keep more of what you make, and you're setting up your income so that you're balancing, we call it this teeter-totter of really having, think multiple streams of income. Some of that's taxable, some of that's not taxable. And I know that the traditional retirement folks talk about different, take some out of your Roth IRA and take some out of your 401k and that type of stuff. And that's all great. And we use the similar concepts. We just use different vehicles in which to do that so that we're really leveraging tax-free income to offset some of the taxable income that's going to come in. So again, those multiple streams of
Right.
income.
Do you feel that, and this was a long time ago when I read Robert Kiyosaki's book, and then I got involved with them and teaching the games, and it was back in the 90s and started getting into this, is that financial literacy is still not taught. That
It's
was
not.
back in the 90s. And so what we learn, and it's very little still. It's getting better because but there's so much bad stuff online that people are just running through their money and they're trying. So when that person comes to you, you've met with them with a referral or something, and he finally comes to you. Do you find that there's that gap of you're explaining a lot of things that I understand, but do you find as a 60-year-old plus that I've learned the hard way? So are you finding the younger group more open? Or I know we have different assets and stuff like that, hopefully by the time we're 60, but that the younger crowd coming in, even a 30-ish right now, that they're seeing that they're going to have to do more with their money now than maybe our parents or grandparents had to do.
Yeah, for sure, because people don't have pensions anymore, right? If you look back in history, when pensions went away, when we went off the dollar, the government took us off the dollar, that really changed everything. And then the rise of the 401k vehicle really is what is taught today as the gold standard. And we have the math that shows that it's really not good for you. And yes, it sounds fantastic that you get a match for your dollars today and you don't pay taxes today and you take money out later when you're in theoretically a lower tax
Lower.
bracket. But there's so many false premises there that don't hold water. And we have the math. And so what we spend a lot of time on is we have thousands of hours, I don't know how many hours of training on real estate, on taxes, on on why the traditional system is not working. We have calculators. We can put in your own numbers and do the math yourself, right?
Yeah, yeah.
So we're really big on raising people's financial acumen so that they are empowered to make their own decisions and they can take back control versus blindly turning it over to
Yeah, somebody else.
somebody who has A, no control over anything in the first place, and then B is just implementing a traditional system that isn't working for people. What do people talk about now, right? Everybody used to say, oh, you retire at 65. Guess what do they say now? They're saying, oh, now you retire at 70. Why is that? Because people are not able to retire at 65.
Yeah. What is the current amount of money that has been stated that you would need to have in the bank? I don't even know, maybe, or access it or whatever to retire in the future. It used to be like $1 million. I don't know what it is now.
Yeah, that won't get you anywhere.
Yeah,
So
no.
we actually have a calculator for that. It goes back, if you remember, I talked about the strike number.
Yep.
Because your strike number might be different than
Mhm.
mine and might be different than
Right.
somebody else's. And so really looking at what your strike number is, then we have a calculator that says what's the asset base that you need to meet that strike number, because we know that with that correlation of asset base, and we know based on how we can turn that into income while never your principal. We're not selling off assets, right? Because typically if you have, let's just say, a 401k or you have stock, what happens? You're selling that asset. So you're decreasing that account every year or every month that you're taking a distribution. Or if you sell stock, right? Once you sell that
Right.
stock, then it's gone.
Right.
So we are reconfiguring the asset base to be in asset classes. You're never selling those. They're growing, and you continually can harvest equity and cash flow out of those basically indefinitely. We call it the infinite game because it's never ending versus you chew down your 401k and you mess up and how long you make that money last, like you're done.
Yeah. Oh, no, I agree. That's why I say for my college professor days of my retirement, I just didn't know what I was doing. I was just putting money into my, what is it? I don't even know, 401k, I guess it is. And that was again 25 years ago. So I've done really well because it's just been sitting there. If I would have
And I
known
did too.
anything, yeah, if I would have known anything, I was really fortunate. Google stock did really good in the beginning. Stuff that I didn't know anything about it. Just someone said, go buy stock. I said, okay. Having the plan. And so it sounds like your plan is amazing and how that system and what you have set up with that. And as you start talking with people, and about how long, obviously, it takes a longer period of time to go through a lot of this stuff. It's not an overnight,
No, it's a
it's not
journey
an
for sure.
overnight get rich, blah, blah, blah. No, that's not going
No.
to happen. We know
Mm-mm.
that.
This is a long-term
It's
fight.
a long term, yeah. So
Yeah.
how long and I know everybody's different because everybody comes in with different education, what's an average time of getting involved with you and going, I understand that you're a coach with the program and going through the coaching and all the education that a program like this would take from a standpoint of most people don't have anything on their plate. So what would you see going through a program like this?
Yeah, so I think that I break it down into maybe two really big buckets, okay? Because this is, again, it's so tailored to people because it's so unique and so custom. And that's, I think, what makes this unique is that you're not going to find the level of tailoring that we do within our system. But up front, there's a lot of work, right? Because you're creating a game plan, you're repositioning your assets, you're redeploying them, you're getting yourself educated. So that first 6 to 12 months, there's a lot of work that you're doing. We're helping you restructure and understand your tax strategy. Helping you set up entity structure. Like we help you set up an entity structure that not only helps protect against liability, but also helps with setting up your passive real estate business, right? We're all about trying to get people, for those who understand the ESBI quadrant, right? That the
Oh
tax
yeah.
code
Mhm.
is set up to be on the right side of the quadrant where you're either a
Right.
business
Employee.
owner
Yeah.
or an investor.
Or investor
And
employee.
yeah, and it's not set up to be a W-2 worker. Now we love
No.
two workers
We love, yeah.
because you can go get really great loans. But
Yes.
so it's again this journey. So you
Yeah.
don't just jump from one side of the quadrant usually to the other. It is
Right.
a journey.
Yeah.
And but that's the beautiful thing. So every year is a new year of like where you're at. So the things I'm doing now, so I've been in this program since 2019. So what is that, 5 or 6 years? The
Yeah.
thing I'm doing now is radically different than what I was doing in the first couple years because I was building my system. Now my system has been allowed to grow. And this year I just actually did some massive repositioning of assets where I extracted some equity and then I redeployed it and I took cash flow on that specific asset to a break even to like over $4,000 a month just by repositioning my equity. And that's because that portfolio has had time to grow. So
Mm.
there's a magical window, right? So there's a lot of upfront work. Then you're building your system, and that depends on how fast you build it, depending on your assets and how resilient you are and how creative and how much you implement the system. But there's this magical number of 10 years now, right? Where you can really go and start to harvest, right? Remember, real estate's just one
Right.
component of the
Component.
system, but
Hmm.
it's a critical component of the system because you let your assets grow for 10 years. And it might be 6, 7, 8, 9, 10. It doesn't have to be 10, but there's a very magical number at 10 where you can start to harvest that equity. And so your appreciation of the property has gone up, your tenants have paid down the mortgage, and so that you've got your equity. You go
Right.
in and you do a cash out refi, and guess what? That money is tax free. Like you pull out $150,000, $200,000, depending on the size of the asset, which it's not unheard of at all, just to go
No.
pull out $100,000,
Yeah.
$150,000 on the size assets that we recommend. We recommend a very specific asset class, not only because it optimizes your cash on cash, but it also helps give you parameters to know that you're not over using more capital than you need to get the kind of returns that we see, which is like a no-brainer.
Right.
And that is tax-free income. You don't have to report that to the government. Like where else can you just every year indefinitely harvest $100,000+ of tax-free income? Equity mill.
Yeah.
And so if you buy two properties a year for 10 years, you have 20 properties, you have a portfolio, and you can just run that machine like forever.
No, that's how I started way back in 96. And then I got into building businesses, which all are real estate related, and doing that too. And I found that the people that I was around was the biggest factor, and how I was
Absolutely.
using, not using, but absorbing the education and working with the community. And the more that I was able to not only absorb from them, but to contribute, the better off that my portfolio has been.
Yep.
And it's just, I'm a constant learner, perennial teacher, and I want to give back for that.
Yep.
When you see your community interacting, do they also, yeah, I know you said you have a specific asset class. Do they also interact with purchasing properties together or being those types of things? Or is that not something that you may see within the group?
Yeah, so if I understand the question, so when I go purchase, I'll just use me as an example. I'm purchasing the property, it's my property. I'm not purchasing that as a group. I'm not purchasing that. I'm not doing it as a partnership. Now, not
Okay.
that we just did a training actually on sometimes if you're a little light on your asset base to get started. Partnering is a great way.
Mm.
And there's different ways to partner. Maybe somebody has the credit and you have the assets or vice versa, or maybe it's joint. So there's lots of different ways to partner. And so we do teach that to help people accelerate their game plan if they've run out of capital or just don't have a lot of capital to start with. It's not that partnering is bad, but we're not buying as a group. Now,
Group. Okay.
what we do have is we have a turnkey coach that helps people think about which markets to invest in because
Okay.
depending on, again, age, priority, what you want, blah, blah, blah. You may be better served to invest in market A versus market B. So we have what's the right word? I don't like the word network, but for lack of a better word, a network of turnkey providers that we work with that we have vetted and know are really solid companies to work with. In the end, you decide, do I want to work with company A or company B, market C, market D? So in the end, you're making those decisions. We're just providing you some pre-vetted options so that you're not out just randomly finding some
stuff.
turnkey
Right.
provider in some market that may or may not be great. And look, nothing stays the same. A turnkey provider that might be amazing today might not be amazing in 2 years. I just repositioned a market from a turnkey provider and moved it to a new one because the turnkey provider was no longer serving my needs. It's just part of the game. It's part of real estate. We're dealing with people, we're dealing with real estate, and guess what? Things are going to happen.
Yes, we know that.
Things are going to happen.
Those of us who've been in it for a while, we know that.
So things are going to happen. So
yes.
because of that, we teach reserves heavily
Reserve.
so that you don't get knocked out of the game and you can weather any
storms
that come up.
Yeah. And that's great because a lot of people, again, talking about the financial literacy and talking about like what we hear about in the past. It's better now, though, that there's more things out there that we've heard and we've read all about real estate throughout our lives. But people, because they don't have that, I guess that, what's the word I want to say? The trust, maybe, or something, because they're maybe a W-2 employee. That's what their money's going to go to, that 401k or whatever the case may be told. Or but I did when I started my college career as a professor. I'm sitting next to a guy and he was into the stock market. And he goes, put all your money in this. Okay. So it worked out well back then, but I didn't want to have anything to do with it. Let's just throw the money in there because the university was supporting 50%. It was like, oh, this is good. I put my dollar in, they're going to put, actually, they were 100%. So it was crazy. It was really weird back then.
Yeah,
but
it's a different day also.
It's a different, yeah, yes, it was. So in today, and again, we're talking about today's markets and things like that, and because of the up and down and back and forth and who knows what's going to happen next, your system is weathering these things then basically. Whether the market goes down, the market comes up, goes sideways, because you have the metrics to show the data of what you're doing. And that's what you're basing this on, right? Correct?
Yeah. And one of the things I love about this community and the leaders who are really the thought leaders of the principles and the new things is, right, regardless of your political affiliation, the government, what we do know is the government's going to do stupid things. Right? They're going to print a bunch of money, and then guess what? We're going to have a lot of inflation. Shocker. And these group of thought leaders understand the nuances so well that they are constantly readjusting. How can we, as real estate investors, as from a tax code perspective, how can we be at the front of the line to be benefiting from whatever's going on in the economy? So, for example, we've done a lot of education around inflation and how do you fight inflation and how do you protect against inflation so that as inflation continues to be with us and it's going to continue to go up and down, how do you position yourself for the long term to make sure that you're not screwed up in 20 years because you didn't plan appropriately today? When we were in COVID, and I wouldn't have known this if I hadn't been in this group. Did you know, and you probably know because you're pretty savvy, but most people didn't know that they could take $100,000 out of their 401k or their retirement vehicle with no 10% penalty if they were under 59 and a half. That's a great opportunity. I took $100,000 out of my 401k because I wasn't 59 at the time. It allowed me to accelerate my game plan by a lot because I was able to redeploy that into real estate. But I wouldn't have known that if I wasn't in this group. And so,
Yeah, but the other thing too, I was going to say is money was so cheap back then because we were trying to get everything going. And so when it's 2.5% for a
bye bye.
mortgage, yeah, exactly. And if you've got that, but again, unless you have, I think, again, people around you, most people aren't going to see that big picture because most people buy a house. That's their biggest investment of their
That's it.
life, and they're going to stay in that house, not as long as other in the past, but they are feel comfortable with that. And then if we do find the people that are very interested in doing the investing, again, my brother and I didn't know what the heck we were doing, and we bought 10 houses in 3 months, but that was absolutely stupid.
No,
So
but then it was brilliant, right?
it was, but for our standpoint, coming from not knowing anything, both with full-time jobs, and he's supplying a little bit more money, but I'm supplying the workforce. It was a great learning experience, and I would do it again, maybe not now, but I'm glad that I had the people around me and I sought the education. So I went out and I learned about real estate and stuff with seminars and things like I invested in that. And people go, why do you still spend so much money? I go, oh my gosh, gang, I invest in my education because that's how I have what I have.
Yeah,
You know,
absolutely.
the five people around you, just look and see. And so I tell, especially my handyman around here, my employees and I'm going, okay, come on, who are you hanging out with? And they're going, oh yeah, okay. So I had one the other day, he goes, can I come sit and talk to you? I said, absolutely, come talk to me.
Talk to me.
Because he was so funny. He goes, I don't know what happened. I made $150,000 just last year and I don't I said, it's not how much you make, it's what you do with it and how much you keep.
How much you keep.
Yes. And he was like, yeah, I know. I spend a lot. I said, let's figure this out because he's 32 years old. He's got kids. I said, we have to figure this out. And he goes, you know what? Thank you very much. I said,
Send them my
let's talk
way.
about it. Exactly. Yeah. And again, to assist him because it's just me right now where he's coming and asking stuff. And I obviously am not going to be the sole source of his education because I like to refer people out. And by the way, give us the name of the group that you're with and some of the ways to contact you so that people listening to this will be able to get in touch with you.
Yeah, no, thank you for that. So I would give a couple ways. So if you just want to understand more about our system and what we're doing, I would go to Wealth Outside Wall Street. Did I get that right? Wealth
Yeah, well,
Outside Wall Street. Okay. That would just be if you just want to learn a little bit more about what we're doing and all of that. And it's if you want to take further steps, there's links and stuff that you can do there. We also, if you want to jump in and get started, right now we are launching a summit that will be coming on board soon. We have a book coming out in the fall. And we just launched a new podcast. We, meaning my boss, Ryan D. Lee, who's absolutely amazing, the most authentic guy I've ever met. Love him so much. And so that podcast is called The Passive Income Machine Podcast, Ryan D. Lee. And so there's tremendous education there. But if you want to sign up for the summit, which there's some fast action bonuses there for people who want to get started. That is Retire in 10 Years is the website. Retire in 10, like 10 years. And then if you want to contact me directly, you can email me at Coach Leah, Leah, at cashflowtactics.com. We're in a little bit of a rebranding right now, so we're straddling some repositioning, but and then I'm not like massive on social media, but I am on Leah Whitman on Instagram. I'm on LinkedIn, Facebook, so they could reach out that way.
a few things like that.
Yeah, there's a few things. But
I know there's so much social media.
I'm not a big influencer or anything like that. So
No, I hire a 26-year-old to do all that. But I could do it from my background. It's just, you know,
but why? There's some things you just need to outsource, right?
best use of our time.
It's
That's
a better
basically the
use
way
of
I
your
look at
time.
it.
It's leverage, right? What
Yes,
do the
it's
wealthy
leverage.
do? The
It's
wealthy
actually
know how to
leverage.
the right thing,
Absolutely.
and that is what really accelerates where you get to where you want to go faster.
That's true. The thing that's coming up, golly, I just lost my brain. It was the afternoon here
Summit?
too. The summit, yes. So is that an online or is it an in-person
Yeah, it'll
or is
be
it both?
online. Yes.
Okay.
So yeah, it's an online event. We'll have amazing speakers and I think that I should know this a little bit better. I think in the retire in 10 years, one of the fast actions, if you want to get going right away, I believe they can jump in and we'll just start building out a game plan for you.
For whatever you're in, whatever
Yeah,
position
whenever
you are
you're
right
ready,
now.
type of
Yeah.
thing. Because what I coach for within Wealth Outside of Wall Street, which is the company, right? The product or the system is the passive income machine. And then the program that we wrap all our community in, where we have the coaching, that's where we build out the game plan, all of that is Money Mastery. And
Money.
that's
Okay.
what I coach in, is the Money
Okay.
Mastery program. And
Great.
that we have live events. We do have live events. We have lots of online training. The live events are amazing because that's where you really build those really personal relationships
Correct.
with
Yeah.
people. So we have 4 to 6 of those, plus we have in-market real estate where we go see real estate in person. So yeah.
Are you located specifically in California as far as all of this, or is it all over the United
Oh,
States?
no, it's all over the US. I just
Okay.
happen to live in California, but
Okay.
actually the big joke is step 1 to financial freedom is move out of
Move
California.
out of California. I know.
But we have a large contingent of Californians, so don't hold it against me that I'm from
Yeah.
California.
I mean,
So
and
many
it's
people
like,
have crazy perspectives of California. We're really good
yeah,
people.
no, I have great friends in California. Here in Florida, yes, we don't have
No,
the
the
taxes and
company
stuff.
is we do business. We have members all over the country. We have events predominantly in Utah. We have an event coming up later this year in Indianapolis. I'm going to Jacksonville, Florida in June for one of our turnkey market education /
Really, in Jacksonville?
Yeah, but we invest a lot in the Midwest from
Really?
Yeah, absolutely. The coasts are a lot harder it just takes too much capital to invest on the coast.
Yeah.
It's just not a good return on money. And there's lots of other issues too. But so yeah, I just exited out of my rental market in California for multiple.
Oh, yeah. Yeah. Anyways, this has been fantastic. Thank you so much, Leah, for coming on board with Sip, Sell, Repeat. And thank you for all your information. And we're going to get this off to the group within the next couple of weeks, hopefully.
That's a wrap on this episode of Sip, Sell, Repeat. If you loved what you heard, don't forget to subscribe, leave a review, and share it with another powerhouse woman in real estate. Got a topic you want me to cover? Send me a message. I'd love to hear from you. Until next time, keep sipping, keep selling, and keep repeating that cycle of success. Cheers to you and your next big deal.